Hello and welcome to Forex.Academy, your #1 website for Forex and crypto education and analysis. In today's edition, we're going to be discussing Biden showing his cards. We're next for the US dollar. On Thursday, the 14th of January, President-elect Joe Biden addresses the US nation and said that the $600 already appropriated is simply not enough. He carried on by saying that the new Democrat government would issue another around $1,400 on top of the $600 payments, thus showing his hand with regard to the 15 million adult dependents relying on the stimulus checks. This segment of the COVID relief package runs to $1.9 trillion. With yet many more millions of Americans, including migrants, who have slipped the net with regard to relief packages, the wranglers about entitlement will go on as long as the pandemic continues to run rife through the United States, with some young adults purchasing new cars with the extra cash and others boasting of savings of $13,000 from the relief payments. It is hardly surprising that there will be continued frictions between the two parties, let alone the public and pressure groups, which will only go to show that this is not a one-size-fits-all policy. The market saw volatility following the comments, with the dollar index shown here on the daily time frame, recovering from its low of 89.15 in the dollar-weighted average against the pound, euro, yen, Swiss franc, Canadian dollar, and Australian and New Zealand dollars. Although the rot stopped on the 6th of January, dollar strength has been conforming to the support line on the 1-hour chart. This was bolstered by Joe Biden's comments on the 14th to the point where we have a high of 90.80 at the time of writing. While the bull run on the US dollar may be partially down to Joe Biden's COVID relief policy, there are other factors to consider, including the buy the rumor, sell the fact trading phenomenon, where market participants were largely expecting the incoming president to instigate a larger relief package, and especially now that the Democrats are in control in Congress, thus making it more easily to be able to get through new policies. Other things to consider, as shown here on the daily cable chart, where the pound to US dollar pair remains in a bull run, although it is topped at the 1.37 exchange rate, having achieved the high due to the success of the UK and EU signing the post-Brexit free trade deal. This has been giving the pair a lift, but where the United Kingdom is currently in Tier 4 lockdown to an increasing COVID transmission rate. Here we can see a daily chart of the Euro-US dollar pair, which is by volume the largest traded component on a weighted basis of the dollar index, and where we can see the CIA here. As this is a daily chart of the Euro-US dollar pair, weighted volume is the largest component of the US dollar index, and therefore more likely to be a larger contributing factor to the directional bias of the dollar index. Here we have a classic bull run followed by a period of consolidation, with a continuation bull run to a high of 1.23 during the beginning of 2021. Price action has breached the bull run's resistance line as highlighted and has fallen back to just below 1.21 at the time of writing. This is lending itself to a general strength of the US dollar when simultaneously combined with the actions of cable. Although Joe Biden's COVID relief stimulus package would appear to be a pivotal point in the acceleration in the US dollar strength, there are other things to consider, such as multi-month highs, as shown with cable on the euro-dollar pair. We also have to consider the fact that the dollar index failed to breach the 89.0 key level, where the previous high going back to the beginning of the pandemic was 103.0, a hefty grabbing for the dollar, and where traders will always be eyeing the tops and bottoms of the huge moves while looking for turning points. Traders will always expect volatility when there is a change of presidents, and even so more when there is a change in a party, such as in this case where the outgoing Republicans will be replaced by the Democratic Party policies. The next stage will be waiting to see if the outgoing party policies are replaced, and if so, what this might mean for the financial markets. If you enjoyed the video, then please like and subscribe, and leave a comment down below about anything you would like us to discuss in future, or if you have any questions about this particular video. Have a great day.